very tumultuous week in the market. You can see SPY on all week last week, just pretty much on increased volume. Very turbulent week. The VIX was elevated, rates. You can see here we came down to the 50 pretty nicely. It looked like we were going to fall apart, but last 10 minutes, the imbalance orders kind of saved us from the abyss. If we look at the hourly chart, you can see we're still in this, the 200 is still rolled over. We're still in declining tops, declining bottoms. And we almost got down to my target of this 447.11 on the SPY. So the target for me next week is going to be this level right here, that 447 to 353, 53, kind of, almost just slightly above where we were. And then the other target on the upside is this 458.36. So, but right now, protection is the name of the game. We did get through non-farm payrolls pretty nicely. Mixed bag report. I don't think it's anything that's going to take the Fed off of its current track. So, and if you look here on Friday, you can kind of see we did, initially drop and then pop on those non-farm payroll reports. Did try to pop us, but the fade trade, which we talked about all week, you got to know what kind of market you're in. This market has shifted. The fade trade is the trade, and Friday is no different. So we had like 3 of the 5 days last week where the fade trade was a relevant trade. So they did fade it right off of after the initial pop here, faded from the open, couldn't get back above VWAP until the last 10 minutes of the day, where they tried to climb it back up to this level here. So definitely a change of character in the market. If you look at the QQQs, again, Qs just falling off that head and shoulders pattern that we talked about last week. Kind of an abbreviated short version, but again, it looks like it could be in play. This is the big level right here, 382.71 on the Qs, the 50 and the 100, and then you got this level right down here. If you look at the hourly chart on the Qs, again, extremely oversold level 2 here. We have worked off to oversold level 1. But breaking this neckline in here, where it kind of chopped around a little bit, was a key point. So we'll see if that stays in play next week. The bastard child, stepchild, is IWM, small caps. Really, really extreme volume in here. For the seasonality, you can kind of see weak, which you would expect. If we look at the hourly chart, you can see, again, declining 200, declining tops, declining bottoms. Though, interestingly enough, on the hourly, didn't print a new low here that they made on Wednesday. So that could be the divergence that we're looking for. Didn't print that new low, but we'll keep an eye out on that. As far as oil getting smacked around again on the growth trade happening. You have also nat gas getting smacked around, pulling off. You have copper hanging below its 200. You got gold, which is kind of just hanging down, not completely falling apart. I would expect it to be a little bit more stronger, but hanging in there. Rates, the name of the game. We called this one last week after the Powell came out and basically delivered the message that they are retiring the word transitory and that they're going after inflation. It could be an issue. They're going to accelerate possibly the taper. So the big issue with rates, the reason we called a drop in rates when everybody else was causing a rise in rates, is because they're always behind the game. Okay, just think about 2018, think about 2008. By the time these officials, these elected officials, tend to come in and put their focus on something. They're typically behind the game. So we saw the yield curve dramatically flatten. We saw rates come back. If you look, you can see here back in July, this is where the 10-year is. If you look at the 30-year, back where July is, we're below that level dramatically. So with the long-term rates squeezing in a lot quicker than the intermediate to short-term rates, that is flattened and squeezed the yield curve. That's telling us a story, dramatic drop in here. That's why we went long. The one trade we publicly did on the show, we went long, or the two trades we did, one was Myrna, didn't work out. But this one, the TLT, hit our target to the T up here that we kind of called out. It looks like it wants to continue its ascension up. So again, don't get caught up into what all the TV and market heads are saying. They were causing for rates to bust through here, and here you see the rates kind of pulling off. So that's important. So what you got to do, being a trader, is you have to make you're like being a doctor. You have to identify, take all the pieces of the puzzle and identify what is going on with the patient. And right now, what rates are telling us, okay, dropping, yield curve flattening, long end is basically saying recession. It's also saying possible policy error by the Fed. If you look at oil pulling off, telling us demand is going to be weaker, possibly recession, or at least slowdown in growth. IWM, small caps, more in tune to the economy, pulling back definitely in the bottom end now from its breakout in the bottom end of its zone. Again, that's all giving us a clue, telling us something. And meanwhile, if we pull up the dollar, which is typically the safe haven, I would expect the dollar to kind of rise in here. Of course, that's an old school thought. A lot of people don't think that way, but dollar's still maintaining its breakout here, so it's not falling completely apart. So I think really what a lot of this is telling, and then if you look at the VIX here, the VIX extremely elevated, okay? And if we look at the VIX and we kind of expand this out a couple of years here, okay, you can see we've broken out of this downtrending, declining, squeezing of volatility. We've kind of broken out. We're staying elevated in this area. If you look at volatility, volatility tends to pop, pull back, pop, pull back, pop, pull back. We're actually remaining a little elevated in here. And I'm not saying we're going back to this situation, but the last time we saw ourselves kind of remain elevated and breaking out of a trend, if you look here, okay, this was the story last time, and you can see, going into the pandemic, volatility was kind of, pulling back, and we kind of last time remained a little bit elevated in here. We had this explosion. Of course, that was the pandemic. We're not calling for that, but it definitely, what we're looking at is a change of character of the volatility we've seen since we recovered into the pandemic. And you got to take note of that. That's an important piece of the puzzle. With volatility making higher highs in here, it's definitely something to take note with. But with that said, we have gotten through a couple of the important things. We got through non-farm payrolls, but the problem is now we're going into a Fed watch. Okay, December 15th is the next Fed meeting. That is the next area to really kind of lay your hat on and look. We've seen an advance. We talked about this last week. At the beginning of the week, we saw a divergence on the ADD line, broke the August lows. So, that is a divergence, and, kind of was a good warning to look at, because it kind of gave us a little of a look back. Now, with this going forward, it basically says, be careful. The market's changed, and we're back down to the 50. Now, when we've been back down to the 50, the market, that's where buyers have been lurking, okay, except for this little area here where they brought it back down to the 100. Well, we've pretty much come back down to the 100. But again, it's guilty till proven innocent. Do not, we're not buying the dip in here. We're not buying a dip in here. We're seeing a change of character. The majority of the stocks have pulled off, and really about 60 to 70% of the market's been in a bear market for a little bit anyhow. So it's definitely underneath the surface. There is a lot of tough things, a lot of stocks that are not performing well, a lot of stocks that are in bear markets. You can kind of look through. We've gone through these stocks over and over again on our show. PayPal, Visa. I mean, look what Square's done. I know the talk is the variant, the new Omicron variant, but even the plays that are COVID related, they're not popping, right? Look at Zoom, look at Peloton, even Chewy, kind of laying low. Walmart's pulled off, retail's pulled off a little bit. We'll see if they find a little bit space, but a lot of those high flyers that's been running, look at Unity Software pulling off, Crowd pulling off, Net, okay, pulling off. So Asana, look at the damage done on these stocks, and they're starting to show up, and they're now, instead of rotating to buy, they're rotating like a pack of ravenous wolves to basically chew up wherever there's overvaluations. So we want to be careful. Now, obviously, we are extremely oversold. So now, to me, is not the time to be coming in here shorting. But you got to be careful, because the fade trade, the strength is being sold, and until that changes, until that character changes, short-term trades, you can't trust really any bounces in this market at this point. Tesla, they've pulled Tesla back off. Apple, which has been our leader, still kind of holding up, but still, they've pulled it back almost 10%. You got Nvidia, again, another leader holding up, but if Nvidia loses the 300 level, look out below to 260. So but holding up right now. But you're seeing some other stocks. AMD had pretty nice couple bars forming down there and pulling off. You're seeing the travel stocks not reopening plays, not really getting hit. Our theory on what's going on in the market right now is that we're looking at more of a PAL-driven event rather than a COVID variant-driven event, though the market hates uncertainty, and the uncertainty of the variant, of course, is going to be adding to the mixture on the downside. And then you're seeing that in the markets. Over the weekend, we saw a risk off on a lot of other assets. Bitcoin finally, and the futures is not showing it, but these are the futures. But the Bitcoin has actually, and what I'll do is I'll pull this up for you guys on a different chart, because that's not showing the futures, because Bitcoin broke 50,000 over the weekend. And that's definitely something to take note of. They're basically in a process of selling off assets. So you can see here, if you look at Bitcoin, currently at 48.5. So the futures, not catching up. Bitcoin had crashed all the way back down to 42, down to this area. So it's definitely, the risk off. All the altcoins just getting shellacked. Shiba, Ethereum even had a nice little panic sell in here. So they are selling selling everything. They're selling everything, asking questions later. Cardano, this is why, we get out of this failed breakout. You get out because you typically there's more weakness to be had. Matic kind of holding up, but KDA falling apart. Gala, kind of still flagging there. Algo back down towards the bottom. All these altcoins, all these shit coins, all the stable coins, weak, pulling back, and they're basically, it's a risk on mode in the market. So risk off mode, risk off. So they're basically selling everything and anything, which is obviously worrisome. Now, again, we are oversold. Like I said before, what we want to kind of look at, guys, is, look at for the market character to change again. I think it's going to be a volatile month because of what Powell said in his testimony. So we're going to have to look a little further. We're going to have to look into see if we can get a character change back to the other side. But I think we're going to be capped going into the rest of this month, at least into the Fed meeting, because we have that accelerated taper, a lot of uncertainty related to that. So we should have some more news on this variant over the next week, which should alleviate a little of that pressure. I'm looking for a Santa rally after the Fed meeting, once we've taken all that uncertainty off the table, and I'm looking for a buy the news type scenario once we go into the Fed meeting. So that's my strategy. So I'm going to hand it over to Nick. He's going to go over some stocks. He'll give you his thoughts on the market, and because this is just one opinion from my side. He'll give you his thoughts. He'll answer any questions. I got to pop off, guys, because like I said, I got a baptism to go to. So I am, and no, it's not me. I'm beyond redeemable.
Mm-hmm.
I'm beyond redeemable. So I'm gonna pop off here, and Desire, I hope you get better, feel better.
Cool.
Thanks, guys.
Alrighty. Cool. So yeah, I mean, I think Mike summed up the the market adequately. It's going to be an interesting time. It's going to be a tumultuous time. Only things I want to add into his discussion is a couple interesting little things. First of all, we've seen some insane insider selling. We've talked about this during the midday show. We've seen CEOs and corporate insiders this year so far have sold $69 billion worth of stock. That is an all-time yearly record. It is 79%, I believe, higher than the 10-year average, and it is well over last year's insider selling by like about 40% or so. So it's not all just routine scheduled selling either, and that's always something that you want to be cognizant of. It's these CEOs knowing that some of these companies are bloated, are overinflated. I mean, you even have Elon Musk selling more Tesla over the last couple of days here. So you've got Microsoft CEO selling, you had Bezos selling, and so they're not necessarily oracles here, but the insiders know when they feel that things are out of whack within their own valuations, and they love money, so they're going to lock one in. So we've seen a lot of insider selling out there. Obviously, you still have stuff that could develop, that could appeal to the market, or at least matter to the market someday, in terms of foreign relations between China, between Russia. That stuff isn't having any kind of pull or influence on the market these days. Right now, there's too much for the market to focus on, but that could change, that could shift if things escalate. You do have China slowly trying to delist U.S. Companies out of the U.S. markets, so it is something that puts pressure on the Chinese stocks at least. And then also, I've talked about this stat. I'll just say it again. Most of the time since the market's been trading, we touch the 200-day at least once in a year. So that is an ideal target. If we continue to get a pullback, he said, hopefully we get a buy the news event in the Fed. That's that's not until the 15th. So we've got another week and a half until that happens. A lot can happen in that time. Goldman came out over the weekend, decreased their 2022 GDP forecasts. They're citing a little bit more of a slowdown in growth. So there are concerns of that kind of economic pullback or turning into a contraction due to Fed policy missteps. And look, I mean, the market is technically overvalued. So this isn't that surprising to see the market shift out of those high flyers, the Asanas, the Nets, the DocuSigns, the CrowdStrikes, the Unities, all of those guys, the Datadogs, the guys that have been running exponentially, even Tesla starting, and Netflix, and those guys really starting to see the pressure come off from those highs. You've got price to sales way past the dot-com bubble. Buffett indicator's been off the charts. You've had a lot of things kind of capitulating there in the background. So it's just, there's a lot of pressure to lock in profits, and the market was not prepared. The market was not protected. It didn't have insurance to the downside, and that exacerbated things. People are over leveraged. They didn't take many puts or any kind of downside protection, and that caused a little bit of a stampede as well. And so we have no idea. The market could bounce and just go back to highs from here. Market could continue to crash, but we're just gonna have to watch those levels. And then one thing I wanted to mention with Bitcoin that kind of accelerated that drop. Now, obviously, these futures don't show the full drop, but over $2.6 billion liquidated in the last 24 hours in Bitcoin. This is just another great example. It's kind of like the markets. People were very, very heavily leveraged in Bitcoin. I mean, super heavily leveraged. We had billions liquidated this weekend because of this drop, because they were just over leveraged and not prepared. The largest single liquidation I've seen so far is about 27 million. I mean, we're talking hundreds of thousands of accounts apparently were blown out from this drop. So that exacerbates things. So while this drop otherwise may have just gone to 55,000 48,000, whatever. It added to that acceleration. So it's just another example of the market, or whatever market, Bitcoin, crypto, stocks, gold, whatever, gets over leveraged, gets overhyped, and doesn't put on protection. It accelerates that reaction to the downside. So we'll have to see, if Bitcoin stabilizes now, if this is a buy the dip opportunity now that that dust is settling. We'll have to see, obviously, if people now maybe pull more money from that market. We did see them push into the bond market. Maybe we'll see them now try to buy crypto cheaper. Ethereum dropped as well, but it wasn't to the same extent, obviously. In terms of this week, Monday is going to be very, very quiet. No real economics or anything to worry about, in my opinion. You do have some some bond auctions this week that I think could be interesting. 10-year, 30-year, even like the 3-year notes. A lot of those. So those could be interesting to see what the demand for those look like and what the reaction. Those can sometimes cause a move in rates and in the market, depending on how strong or weak those auctions are. We do have the JOLTS report on Wednesday. That is something I'm very still curious about, because it's come a little bit more in play ever since the labor market has softened. That's going to be Wednesday at 10 a.m. Because in the last couple JOLTS reports, we've seen 2 million. First, it was 2 million more job openings than there were unemployed workers. Last one was 3 million. So it's actually going up. And it's going the wrong way, in my opinion. So you're seeing a huge amount of job openings compared to amount of unemployed workers actually looking for work. And the labor turnover surveys at its all-time highs. People are quitting at all-time high rates. So there's still labor pressure out there. It was a mixed bag in terms of the jobs report on Friday. We talked about that in terms of the two different measurements, the household survey versus the other survey. But I think the JOLTS is definitely something to keep an eye on as well. And then we've got CPI and a couple other things next week as well. But other than that, it's going to likely be a relatively quiet week from economics. I'm also curious to see about the energy crisis, if anything continues to roil there. We talked about cold snaps hitting. Pennsylvania's already warning they're going to have to increase their prices. Hawaii's being hit with a rare blizzard warning, so it's even in the U.S. starting to feel that winter pressure. Europe's being hit, I believe, by a cold snap from La Nina, and then you've got just cold snaps around. So it'll be interesting to see if this pushes crude higher, or if the expected slowdown in growth is going to overtake the what's going on here. So those are the extra things that we'll have to see in the market. I mean, it's a good time to be a short-term trader, for sure. I don't think it's necessarily time to start going to your shopping list and spending money in the market, because we have no indication that this market's ready to bounce yet. So we'll have to see. But the market wasn't all doom and gloom. It's not like they're liquidating everything. In fact, Friday we saw them what felt like they were rotating into the slow boys, the stable boys, the blue chip guys. So like IBM was green, actually had a relatively decent day. Dell broke out. Coke was green, actually finished at the highs. Intel even is stabilized because they're stuck in the dumpster. Walmart was green. Home Depot is holding up better. John Deere is holding up a little better. So you've got kind of these these kind of market safe trades, if you will, the not tech, the not speculative plays. We saw rotation into those guys. So those are going to be some of the stocks that I'm watching this week. If the market continues to see that withdrawal out of tech and out of the companies like DocuSign, Asana, Net, Datadog, CrowdStrike. I mean, some of these are, have let off some good steam, especially ones like DocuSign that got the shit kicked out of them after earnings. But there are still some that are higher up. So like Net just finally crossed the 50-day. Datadog is just finally trying to cross the 50-day. So there is still some rotation that can be done out there. Also, do we think they're going to be rotating further out of some of the big boys? So, Amazon's touched its 200-day. Netflix is approaching it. Microsoft still is not even at its 50-day. So there are still some larger cap stocks that have some steam to give out. Apple's holding up relatively well. And then the next question is going to be, what about some other sectors that have been kind of speculative sectors? We've seen EV really start to let out some steam. So Tesla, obviously the mother goose of the EV sector, that one is starting to feel like it's starting maybe to roll over. We'll see. I mean, it's Tesla, so it's hard to say, yeah, it's done. But look at the others, like Lucid finally feeling pressure, XPEV feeling pressure, NIO, and NIO has the added negative of being a China play. all of those LI after, and a lot of these reported fantastic November deliveries, and that was kind of the selling point for these guys. So if we continue to see rotation out of these guys as well, then maybe we see further rotation into the plays that I mentioned. So I'll be watching Dell, and actually Dell was a call that I was watching since we broke these descending highs, though it didn't do anything for a little while in here, had earnings, and then started to finally wake up. But Dell, I'm going to be watching Deere because, I mean, they're below the 200-day, so I need them to get back up. Home Depot, it feels overvalued, but it's still holding up, so maybe it'll be a laggard in terms of dropping. Walmart, I love the bounce off of this level. So this was a good play on Friday. I wouldn't say I'd necessarily be buying it now, but I do love that we bounced off of this level. Even Coke, and honestly Intel, as you know, as much as we've shit on Intel and been riding poor Intel's underperformance this year compared to the rest of the sector. If you think that the rest of the chip makers are going to get profit taking, because that is another sector that has been scorching hot, that has not given out any of the gains. I mean, look at Nvidia. Nvidia is just finally filling its earnings gap here, not even below $300 a share. So if the market's going to rebound, these could be stocks to watch because they've been holding their value. But if you think that the sector is going to be rotating out of some of these, so you saw a little bit heavier selling in AMD, I might watch Intel because you could see people rotate, maybe say lock a little profits in AMD or Qualcomm or something, and then rotate them into Intel. It's possible. I'd love to see at least a little bit of a pulse in this thing before I get excited about that. But we'll see. Other than that, I'll continue to watch, like I said, the EV plays. Unsure in terms of if that pressure's coming off. They are approaching the 200-day on some of them. Some second-day plays that I'll be watching. DocuSign, finished at the low of day after their earnings. And if I zoom out here, you can just put some of this in perspective. We're at a little bit of an inflection point, I suppose. We still have a little ways below us. And I'm not saying this could be continuation. They could be bounce plays. We're going to have to see how the market's shaping up on Monday. Marvell, MRVL, kind of did a little spinning top here. Good earnings, very good earnings. The issue is I think the market kind of weighed down on it. And so we had a nice little consolidation through the second half of the day. I'll watch that going into Monday as well to see where we are and where we could break. Asana had good earnings, but gap is just overvalued still. Gap down below the 200-day. Now, where are we going to see from here? Are we going to see dip buying or not? Smith & Wesson, apparently people aren't even hoarding guns right now. So they had bad earnings. They ended up dropping down to 52-week lows almost at a pretty decent support level here. So we'll see if we get a bounce or if we get continuation. A couple quote-unquote spec plays that I still think have long-term value. One is going to be uranium, obviously. Now, this is a much more longer-term play, so I am not in a rush to buy, especially since it's been in a downward channel, kind of like the rest of the market here. I'm waiting to see where we go here because with alt energy still getting that push, you've had a ton of countries out there really starting to increase their, how much uranium they're trying to do. You also have, don't forget, we have those physical trusts out there that have been trying to corner the uranium market. Sprott, there was another massive one, I believe from Ukraine that I can't recall the name of, but massive companies accruing as much physical uranium as they can. And until that buying stops, I think there's still potential for the price to continue to gouge higher, but until the actual price action itself in uranium stabilizes, I'm not going to be just blindly buying in here. And then also lithium. The issue with lithium is it's kind of trading with the EV plays, which is kind of frustrating because it really, it shouldn't be necessarily tracking the EV plays. If EV market is still going to be hot, which it is technically in terms of selling and production, the November deliveries for all of the China EV plays were well better than were expected. So long as the world's going to keep pushing that, lithium is a primary thing that is going to be benefiting from the batteries and such. Feels a little overvalued. We may have gone a little far, a little fast in here with the rest of EV spec, so I'm okay with this coming off a little further, but this is going to be some that I'll definitely be keeping an eye on in terms of looking to maybe rotate into. We do have a handful of big companies reporting earnings this week, so there could be some to watch maybe. Sentinel One, which I believe is cybersecurity company, a cybersecurity play, coming back down to its IPO price. It's actually kind of where it closed out at, so this could be one that's interesting on Tuesday. You've got a couple others like Stitch Fix. That one's been in the dumpster. Dave and Buster's has been rolling over with the rest of the market. You do have GameStop Wednesday earnings on Wednesday. I don't expect anything out of it. I don't think we get anything. Although you never know, they could have some kind of great forward guidance or abysmal forward guidance that causes a little bit of a gap. But I'm not going to be too interested. Thursdays where I'm going to be watching earnings. You have Costco reporting. Costco's obviously been a monster in this market in terms of return and just escalator to heaven here. You also have Avgo, which is Broadcom. This one's been holding up relatively well, kind of been in a little bit of a flag up here. So you may see people either take profits in front of those earnings, or you may see them run into earnings if people expect good things. For example, Kroger had good earnings, so that kind of sets the stage for Costco now. Oracle reports as well. They've kind of been rolling over a little bit. And Lululemon, if you're interested in retail, although retail for the most part has kind of gotten shellacked lately. So like Nike's dropped off. You've had sorry, Nike's one of the few that's not dropped off, along with Home Depot, but the rest have. You had Macy's pull back, Kohl's has pulled back. I'm blanking on others. Bed Bath and Beyond, or sorry, Best Buy rather, has eviscerated down despite having good earnings. Bed Bath and Beyond pulled back. Nordstrom pulled back. I mean, all these the retail plays have gotten kind of the wind sucked out of them. So they're not really in play anymore. And I don't expect them to bounce. That's not a sector that I'm not interested in personally, just because first of all, if there are growth plays, if there's consumer fears, if there's inflation fears, people they think that growth is going to slow down. I wouldn't expect them to do well. We saw a very, very abysmal Black Friday and Cyber Monday, the first drop in Cyber Monday sales ever. So just not good in terms of people spending right now. And we do have consumer credit numbers this week. So if you want Visa and MasterCard to bounce, God bless you, but you maybe keep an eye out on Tuesday's numbers, see if that helps at all. I'm not going to be holding my breath there. But other than that, I mean, maybe I'll watch like Roblox. Roblox is kind of holding up. They're at the 20-day. That's another one that's good for short-term trading. So if that one breaks these lows and breaks that 20-day, maybe you get a short. If we bounce, maybe get a bounce. But other than that, I'm not going to be just throwing money in stocks like Disney. That one's, although it is kind of basing, I need more, I need more convincing, because otherwise you could do what DraftKings did, descend, pause for a moment, look like it might be getting a bounce, and then just roll back through. So you got to be careful on just trying to catch some of these knives out there, and there's a lot of knives in this market right now. So if you just happen, I'm sure some of these will bounce, but if you happen to pick the wrong ones, you're screwed, and you're not going to be able to try them all. So that's going to be the danger of the market. I mean, I was looking for Facebook to run into the ticker change. They delayed that to next quarter, and the market rolled over as well. And, it's kind of catching up to Twitter, which has been getting the hell kicked out of it. Same as Snapchat, Pinterest, all the social media stocks getting shellacked. The only vaccine play that still holds up is Pfizer. This one actually continues to look strong, but I'm not super keen into that. I actually might be watching Johnson & Johnson for a bounce, only because it's kind of a staple play like Coke, IBM, Dell, but it's also kind of a vaccine play, kind of pharma play. I believe. Don't forget, they're also, I believe, they're doing I think it's a 3-part spinoff, 2-part spinoff, whatever. They're doing some stuff with their company there, so there's a little bit of hype in there. But we're just gonna have to see. I think it's gonna be a lot of short-term trading for me, because until I see where this market's going, I mean, I'm not going to be shorting down here on a lot of these companies. I'm also not going to be buying quite yet. Even the reopening plays, airlines, cruise lines, all just getting kind of shellacked here. Even the casinos are dropping as well. LVS and Wynn back at these lows here, and I think that we could eventually see a rotate into value, but it's not happening yet. So I'm not interested in being the guinea pig in terms of bouncing. So it's going to be very short-term focused for me. I've got those shopping lists in terms of what I'm watching. Maybe I watch, maybe if I do long-term quote unquote, it'd be really short-term swings. It would be in like maybe the Dells or Intel or Coke, or maybe even Walmart if I look for a bounce, or Deere or something. Some of those guys. And I'll watch the chip makers. I think it's going to be a very interesting week for the chip makers. If the market continues to drop, do the chip makers follow, or do we continue to see value hold up in them, or do we see people head for the exits and lock in profits because in fear that they're going to do what the guys like Net did, and DocuSign and Asana and all that. So it's going to be a very interesting week for sure. But that's really it. I mean, I'm not, China plays are great to short-term trade. God help you if you're trying to buy them. We have DDD listing, and Baba's just heading straight into the gutter, straight back towards IPO prices. At this rate. But I think that's really largely going to be it. It's going to be an interesting week. It might be a slow week in terms of trades I put on. It really, things are going to need to be setting up at good levels for me, and I'm not going to necessarily trust any kind of just straight up bounce. So it should be fun. But if we do get a bounce in Bitcoin, maybe I'll watch like a Riot or a Mara or something. But I don't know. They also have the added weakness from the market kind of weighing down on them as well. So kind of a double whammy there. But that is it for me. So yeah.